Okay, we are live. We're live. Let me share this on YouTube and get the link to share. Okay, let me get the link to share and then we'll begin immediately. Okay, let me share the link and we should be up immediately. Okay, I've shared the link in the group chat. Let's just give them a few minutes and then they should be here. Okay, I've shared for them. Let's see how many people we would be having. I've seen the link. Okay, let's just give everybody a few minutes and then we'll begin immediately. Okay, in the next, how many minutes will be starting? Let me see. Okay, in the next 3 minutes, we should be starting. Let's just give them a few minutes to join. Let's just give a few people a few minutes to join and then we'll begin the training immediately. Okay, I'm expecting one person to join now. Okay, I think we are ready to go. Since there's going to be a replay, there's no need waiting any further. Let's just begin with the training immediately. Okay. So yeah, anytime anybody joins me, we'll just begin from there. All right. So what I have for you guys today is just introduction to candlesticks. Okay, just like I said the last time, we're going to be taking it step by step. I'm going to explain to you what candlesticks is, so that whenever you go on your chart to conduct any analysis, those green and red lines you're seeing there should not really be or should not really confuse you. Okay, so if I can see somebody has joined us. If you're the one, please kindly drop a comment. Let me know. Somebody has joined us. If you're the person, kindly drop a comment. Let me know. Then we'll begin immediately. Okay. Can see one face. Let me just know that you're here with me, and then we'll begin immediately. All right. Okay. My eyes are on the comment section. Right. So, like I said, today is just going to be Okay, two people have joined. All right, so thank you. Welcome. If you're the person that has joined, please kindly drop a notification. Let me know. All right, great, great. Welcome, Mr. Godwin. Welcome, welcome. I see you. I celebrate you. Welcome. All right, so now before we go further, I said I was going to explain to you guys yesterday's assignment. Okay, so yesterday we didn't have a class because of something happened, and then I gave an assignment. I was expecting everybody to drop the answer, but then it's only two people that dropped their answer, Mr. Vincent and Mr. Boniface. Okay, so today I'm just going to be a recap of the answers to that question. Okay, so first of all, I asked if you are given an opportunity to buy cryptocurrency. Let's assume you are given an information that two investors want to invest 100 million each in a particular cryptocurrency. You can go back to the group chat and see the question. Okay, then I asked which coin will you invest in. I think one of them I said the market cap was 2.7, and then it has the price of 0.01, and then the other was 350 million, and then it has the price of what of 40, how many thousand, 46, and then the price is $46. Okay, and then I now asked which of these assets would you prefer to invest in if you're given the opportunity of, and then you had $1,000 to invest in, and then somebody said he was going to go for $0.01 because it was cheap. Now my response to this particular question is this. First of all, I want to direct you back to the video on market cap analysis. Okay, because if you have paid attention to that particular training, you'd understand that cryptocurrency is not all about the price. All right, so whenever you're doing any cryptocurrency, whenever you want to invest in any cryptocurrency, the last thing you should want to look out for, all right, sorry, let me see. Okay, the last thing you want to look out for is the price of that cryptocurrency. The last thing you want to look at is the price of cryptocurrency. What you need to focus your mind on is the market cap. That is why in that particular question I inserted the market cap there, because the market cap is what is very, very important. Okay, the market cap explains the net worth of that particular cryptocurrency. So if you go and fixate your mind on the price, you're going to miss out on the important information that guarantees what the price increase, right? So now when somebody was actually choosing the $0.1 simply because he thought it was cheap, maybe he thought he was feeling okay, if I had bought this particular coin with $1,000, I'm going to get plenty of it. I'm going to get plenty unit of it. Well, that's going to be true. But on the other hand, you're looking at profitability. You are not going to be profitable, most especially if that 100 million has been invested into that particular business. All right. So let's look at some of the calculations I did here. Okay. So the first you need to understand is that the coin you're going to choose, is that coin with a smaller market cap. Why is that so? Because if you had invested 100 million into that coin of 350 million market cap, you would have increased the coin by what? By 28.6%. Okay, just do the math, check it. 100 million plus 200 and 350 million, it gives us a net worth of what? Okay, so if you can look at it now, 100 million had a significant effect on the market cap of that particular cryptocurrency that had a small market cap. But then I look at it from the other end now, 100 million plus a market cap of $2.7 billion. It just gave $2.8 billion. That is just a 3% move. So 100 million is just a 3% of 2.7 million. Okay, and remember, any amount of money that is put into a particular cryptocurrency will determine how well the coin is going to perform. So if 3% money was pumped into the coin A and then coin A did just 3.7%, it means if you had invested any money in that particular asset, you're going to get just 3% out of that cryptocurrency. And then what is 3% of $1,000? That is just $37. So if you had invested $1,000 in that particular cryptocurrency that has a market cap of 2.7 million, your profit you're going to get at the end of the day is just $37. That is very, very poor. Why did that happen? Because you not really understand the concept of market cap analysis. Okay, but now if you look at it from a different angle, let's look at it from the other coin of 350 million market cap. You understand that 100 million, if you take your calculator, check the percentage of 100 million in 300 million. Check the percentage of 100 million in 300 million. It is approximately 28.6%. Meaning, if anybody had pumped in 100 million into a 300 million market cap, the coin would have moved by 28%. Okay, so what does that mean? It means if any money you had invested in, you're going to get 28% of that money. It's just simple mathematics. First of all, add the money that is going to be added into the existing market cap. So we say we had 350 million plus 100 million, it gives us 450 million market cap. So how do you not do the mathematics? Say, okay, if 350 million of that particular coin is going to give us the coin at $37, right? I mean, okay, 46 at $46, 450 million will give us what? X. You cross multiply, then by the time you're done cross multiplying, you understand that if you had invested $1,000 in that 350 million market cap, after they are 100 million, you're going to be in a profit of what? Of $286. Okay, that is just the difference. In that coin that has a small market cap of 350 million, if you had invested your money, that investor, that 100 million investment by that investor is going to give you what? A $286 profit. Okay, that's just how beautiful it is. Anytime you want to invest in any coin, ensure that you focus on the market cap and not the not the price of the coin. Okay, so you can see that even that one, even though that one the price is expensive now, but if you look at it, 28.6% of that coin, 28% added to $46 is going to give us what? $59. Okay, then I'm going to send a should I call that a theoretical aspect of this on the group chat so that you're able to go through it and understand it, should in case you're still having difficulties understanding what I just said now. All right, so in this, what we're going to be doing today is just what? Candlestick analysis. All right, let me add it to my screen. Candlestick analysis. Okay, so today is going to be very, very fast. I want it to be really, really interesting. Okay, so if you can see my screen, kindly comment 111. Let me know you can see my screen, and then we'll continue. All right, so today we're going to be talking about what? Candlesticks. How to read candlesticks like a pro. What I just did before was just like a recap, trying to summarize all the illustration we did before. Okay, all the example I did I gave yesterday. All right, so in today's section, we're going to be talking about candlesticks analysis. All right, where we're going to be talking about how you can read. Okay, thank you. I can see you. Thank you. All right, so in today's class, we're going to be talking about what? How to read candlesticks like a pro. All right, how to read candlestick like a pro. This class is going to be very, very interesting, as I've taken my time to design. I even went ahead to design some certain graphics like that to better enhance what you're learning. All right, so let us start from there. Now, what are candlesticks? Now, the simplest thing is this: candlesticks. Okay, I can see you. Thank you. Now, what are candlesticks? Now, you might be asking, what are candlesticks? Candlesticks, in the simplest of terms, are those green and yellow lines you see on your chart. Right, the moment you go on your chart and then you start seeing all of those green and yellow lines, all of those things signify what? A candlestick. All right, those are just what? They are candlesticks. Now you'll be asking, now what, like somebody asks you what is a candlestick? Now what you just tell them is this: a candlestick refers to the pictorial illustration of the price movement of a particular asset within a given time frame. All right, the candlestick refers to the pictorial illustration of the price movement of a particular asset within a given time period. Remember, we said a cryptocurrency is not really stable, it's not static. The price tends to move up and move down within a given period of time. So those pictorial illustrations, those green and red candle you're seeing there, are all pictorial illustrations of the price movement of a particular asset. Why I'm using asset here? Because every financial instrument have their own different candlesticks. Crypto has its own, stock has its own, forex has its own, every other financial instrument has their own. All right, so but in this particular case, since we're talking about cryptocurrency, it means candlestick refers to the pictorial illustration of the price movement of a particular cryptocurrency on the chart. All right, so what are the importance of candlestick now? It represents the buying and selling pressure within a given time frame. Okay, if you're in the last videos, if you're in the live session, you understand that when I was explaining candlesticks, I was showing you guys the live. You're seeing the way the candlestick was moving. Those green and red, you see the way it was moving. That's to show you the buying and selling pressure. Okay, that is the beauty of candlestick. It shows the real-time buying and the buying pressure. So by the time maybe when you start practice, you're going to discover that you see that if the red, you've always seen it, the red candle always represent the buy pressure. Okay, so whenever you see the candle is red, it means that people are the sellers are in control. The sellers have more pressure. Whenever you see the candle is green, it means that the buyers have more pressure. Okay, that is exactly what it means. It represents the buying or selling pressure. So whichever party that is winning is going to be represented by the color of the candlesticks. Okay, so if buyers are winning, it's going to be green. If sellers are winning, it's going to be red. All right. Another thing that candlesticks help you do is it allows you. It also shows you the volatility of the crypto. Okay, now what do you mean by volatility now? What do you mean by volatility? Volatility means how fast the coin is fluctuating. Okay, the fluctuation of the coin. Remember now, if you see Bitcoin now, you may see maybe today now, if you're looking at a chart now on a live chart, you say Bitcoin is at 20,100. Before you know it has got to $20,050. Before you know it has gotten to $20,200. Those movements are what we call the price volatility. Right? So candlesticks also help you to see that price volatility. Okay, so that's exactly what candlesticks are. It helps you to show the buyers and sellers pressure within a given time frame, and then it's also what shows you the volatility of a particular cryptocurrency. Now, I was saying within a given time frame because, like I told you, the candlestick vary in the sense that according to what different time frames we have: the 1 hour time frame, the 2 hour time frame, the 3 hour time frame, the 13 time frame. So in each of those time frames, they have their own what candlesticks. They're all the same nomenclature, but then each of these candlesticks what represent is different thing. All right, that's exactly what I want you to know about candlesticks. Okay. So let's go to the next thing now. Anatomy of what? Of candlesticks. Now by anatomy, now what do you mean by anatomy? Anatomy just mean like what? Structure. Now once you look at that candlestick, it's not just a candlestick, it has its parts. Okay. And then if you can look at it, a candlestick has 6 parts. An ideal candlesticks has 6 parts, right? Now, if you're hearing candlestick, then the best way for you to understand candlesticks, but just imagine your ordinary, your real candle, that white candle you have, all right? So that is what that's where the thing got its name from, candlesticks. Okay, so they say there's what there are 6 parts or 6 different parts of a what of a candlesticks. The first one is what? The body. Okay, the body. Now I want you to pay attention to this particular training. If it means you watching the training the second time, it's going to be very, very encouraged. All right. The first one is what? The body. The second one is what? Is the wick. The next one is open. The fourth one is close. We have the high and the low. Don't worry, I'm going to explain to you all of these things practically. Okay, so if you can look at by the side of my screen, my slide here, you're going to see that what I put a chart of a candlesticks. Right, like I always said, the red one signifies a what? A seller's pressure. Okay, now if you can look closely, now I want you to maybe if you can try and zoom in, you discover that inside the red candle there's a what? An arrow facing downward. Okay, that shows you what a seller. Remember, anytime now, let me give you an idea now. Anytime buyers are in control, the coin is going up. Remember, what drives the price of cryptocurrency is demand and supply. So the more people are buying a cryptocurrency, the more the price is going up. I already explained this before. The more people are buying a cryptocurrency, the more it's going up, and then the more people are selling a cryptocurrency, the more the price is falling down. So whenever you see a red candle, just know that okay, the price is falling. That is why inside the candlestick there's this word, there's the downward arrow. Now if you look at the green one, there's an upward arrow, meaning anytime the candle is green, it means the price is increasing. All right. So let us start from the first anatomy now. All right, that is the body. Okay, sorry. Now let us start from the what? From the first part. That is what the body. Now the simplest way to understand the body is this red thing you're seeing, this red visible thing you're seeing. That's what the body is. This red or green body you're seeing is what we mean by what? By the body. Just like the normal candle you have, that white body you have is what? Is the body of the candle. It is what shows you the price movement within a given time frame. Okay. So whenever you see, once you just open your chart and then you're seeing, okay, those red and green. So far as it is visible, you can identify, okay, this is either a red or a green candle. It means that that is the body. All right. The body just shows you the degree of movement of that particular cryptocurrency within that particular time frame. Okay. So now what is the wick now? The wick now, just like in the candle, you understand that the candle, that places to light. That small thing that goes up, that is exactly what the wick is. So in this particular case, that is what it means too. Now, if you can look at my chart now, you'd understand that there's 2 things pointing out. Just like in this particular case now, we have the wick both down and both up. Look at it now. If you look at my chart, you discover that both the red and the green candle have an extension upward and downward. In some cases, they call them the shadow. All right, they call them the wick or the shadow, but whichever one you want to use, it's still the same thing. It's just a difference in nomenclature. Okay, so like I said, the body is the visible colored part of the candle you see, and then the wick are those extension that happens either below or above the candle stick. So now, what does the wick show? The wick shows the volatility of a particular cryptocurrency. There's how far a cryptocurrency has gone and how deep, how low a cryptocurrency has gone. Okay, that's exactly what the wick is. Don't worry, I'm going to explain to you all of these particular things. Just get yourself familiarized with all of these parts. Okay, now what do you mean by the open now? Okay, if you can see it now, the open is there, just like just as the name implies, open. All right. No, remember I said that candlesticks it shows you the movement within a particular time frame. So let's assume that we're in the 1 hour time frame. Maybe we're in 1 o'clock, right? So it's about to enter 2 o'clock. Definitely, once from 1 o'clock to 2 o'clock, a new candlestick will begin to form at 2 o'clock. All right, that's on the 1 hour time frame. Now you'd agree with that at that particular price at which the 2 o'clock candle opened, the 2 o'clock candle began to form is what I mean by what? By the open price. Okay, the open refers to the price at which a particular candle began its formation. If we are saying if we're in a 1 day time frame, maybe we are in today now, right? If you check the chart and discover that today has its candle, the candlestick for tomorrow is yet to start. But the moment you are clocking 12 o'clock, if you have your eyes fixated on the chart, you're going to understand that At 12 o'clock, a new candlestick will begin to form. So that exact price that it begins to form is what refers to what as the open of a what of a candle. Remember that exact price at which the coin began to open, the price began to read at that particular time frame is what I mean by what? By the open. Okay, so that's exactly what the open means. Now, what is the close? Now, just as the open signifies the time in which a particular cryptocurrency started, the close is just the opposite. It refers to the time at which that particular candle closed. So let's assume, let's say before two, let's assume on the 1 day, when we're on the 1 day chart now, on the 1 day chart, 1 day time frame. Sorry, by the time the coin opens, let's say 12 a.m. today, the coin opened at what? Let's say Bitcoin opened at what? $20,000. It opened at $20,000, and then throughout the whole day, it was just fluctuating, and then by the time we get to 11:59 p.m., and then Bitcoin is about to close, and then it closed at what? At $19,000. It means the time at which the candle is closing completely for the day, depending on that particular time frame. Okay, so if we're in the 4 hours time frame, the time at which that a particular 4 hours candle started is what I mean by the word by the open, and the time at which that particular 4 hours candle closed at maybe the exact price at what the candlestick, the time elapsed and then a new one began to form. That's what I mean by what? By the close. Okay, now that's exactly what I mean by what? By the open and the close. Now, what is the high now? I want you to be looking at what? At this particular chart now. Don't worry, I'm going to explain to you why the high, the open and close for each of these candles is different. We can look at it now. The open for the red candle is different, is at a different position from the what? From the open of the green candle. I'm going to explain all of these things to you shortly. Okay, so now what is the high now? I'm just trying to run through all the structures before I start going in depth now. What is the high now? The high refers to, let's assume that, okay, Bitcoin opened at, let's say, let's use a real life example. Let's assume that Bitcoin opened at what? At $20,000. All right, and then before the day runs out, Bitcoin was able to go to what? To $30,000. But probably the pressure was not enough to sustain or hold Bitcoin at that particular price. Bitcoin, instead, within that same day, Bitcoin and dropped. Okay, remember it opened at what? At $20,000. All right, then inside that same day, the price, people were buying, then the price went up to around what? $30,000. But because of the pressure, the buying pressure was not strong enough to sustain Bitcoin at that $30,000. Bitcoin now dropped back even below what? Not even drop back. Maybe it was able to just touch $30,000 and then it now came down small. So far as it has seen $30,000, and then that was the highest point at which it could get to at that particular time frame. That is what the highest point at which a particular price reaches within a specific time frame. All right. So if it's in the 1 day, if you're on a 1 day time frame, means within that particular 1 day, this is the highest price Bitcoin was able to reach before it dropped. Before it was, and this was the highest point able to reach within that particular day. If you're in a 4 hours time frame, look at it. Within that 4 hours, this was the highest price at which Bitcoin was able to reach. Okay, so that's exactly what I mean by high. Now, what does low mean? Low means just what the exact opposite of high. The lowest point at which a particular cryptocurrency was able to reach within that particular time frame. Okay, so let me just explain it using a next example. Now, let me go to let's use a real life example now. Okay, now I want you to look at this one now. Look at the green candle. Let's start from the green candle now. Remember, I told you that a green candle now, forget about the types. I want to explain to you what the open and the high is. Okay, so now what does a green candle? A green candle means that there's a buying pressure. All right, there's the buyers are there. Remember, so whenever people are buying, that's when the coin is going up, and then that is why you have a green candle. Now, pay attention to the price. I don't know if you can see the price, but then if you look at it, they say what? Open. Let's go back to here so I can see something. Now, look at for the red candle. Now, you understand that what? That the open is up, and then the close is down. Meaning, what I meant by by red candle is that the buying pressure is high. As a result, the point at which the coin opened, because of people were buying the coin, it could not stay above that particular place it opened. Rather, it went below the price it opened. Okay, so look at it. The red candle. Remember, a red candle is what? It indicates that there's a fall in the price of the cryptocurrency asset. All right. So if you can see that the red one now, it indicates a bearish candlesticks. Okay, so meaning people were able to the candlestick opened at, let's use Bitcoin for example. The candlestick opened at at $20,000. That is when the particular candlestick began to form. It began to form at at $20,000. But because of the buying pressure was extremely much, the coin, instead of it to be going up, it began to drop. Are you seeing now? So it opened at $20,000, but then it has already started dropping. Then let's assume now it now got to $19,000. As it now got to $19,000, it now retrace back small to 19,500. It now closes at 19,500. You understand that the point at which it opened is higher than the point it closed. That is what we mean by that's why the candle is red. That's why the open is up and the what and the close is down. Right now, look at the green one now. The green one means the what at there's a buying pressure, meaning the point. Let's assume Bitcoin entered the day at what at $20,000, and then people began to buy, and then people began to buy, and then they rose to what to $21,000, and then it closed there. That is what it's showing that what where it opened is higher than where it closed is higher than where it opened. Okay, that's exactly what this open and close means. All right. Open, look at it now. The open for the green candle, the open is what? The open is down. Means as the price opened at a lower price, people began to buy, and the thing was keep on going up. If you can look into the green candle, you saw it's called that there's an arrow heading upward, meaning as the candle opened, as a new candle began to form, that's the open, right? Then people began to buy, and it was steadily increasing, and then even within that particular time frame, it was able to close. It was able to the candle was able to the candle, another new candle was able to start forming after the coin has exceeded the point at which it opened. That is exactly what I mean by the open and the close. Just have at the back of your mind that the red candle means that the price at which the coin opened is higher than the price at which it closed. Okay, meaning that the close was lower. That is it here. If you can look at the arrow, when the price opened, because of the seller's pressure was high, the coin began to dip, and before you know it, it now closed at a lower bottom. Now, but if you look at the green candle, it means that when people began to buy, as the coin opened at a particular price, people began to buy, and then the coin began to go up, and then within that specific time frame, the coin closed at a higher level. That's why the open and the close are different, right? Now I'm going to explain to you this low and close, right? So let's use the example so that you guys can understand it very, very well. All right. So let's go to the next one now. These are when I was talking about types of candlesticks, I was saying there are basically two types of candlesticks. There's just the bearish candlestick, which is the red one, and then there's the bullish candlestick, which is the green one. That's just all about the candlestick. But I want you guys to see this illustration now. Now, hope you can see the figures on the candlesticks. Let's explain with the green one. So let's use figures now to explain, so you'll be able to understand it very, very. If you can see the figures on the candlestick, just let me know that you can see it on the comment section. Okay. Now look at it now. We have the body. The body is green. Okay. Now look at the open. The open is is 46, meaning that particular candle, this particular green candle, it started forming at $46 at that particular price mark. Meaning, let's assume this is a day candle. Okay, let's assume this is a day candle. Meaning the last at the price, just like a button here. Let me use the word a button. Okay, so imagine the previous candlestick handling a button at that particular point, that particular price at which the new candlestick is collecting the button is what I mean by the open. So if you can look at it here in this particular example, we have $46 for the open, $46. All right. Now what does it mean? I mean that is the price at which this candle began to form. But let's assume that as this particular coin opened at $46,000, the people now started selling off. All right, it opened. Yeah, understand what I'm trying to say now. The coin opened at $46. Sorry, I'm saying $46. Quite all right. But then before the price began to go up, sellers began to say, people say, "Kai, this $46." People were still selling off, and then instead of it to start going up, the coin began to go down. Are you paying attention? From $46, people the coins opened at $46. But instead of the coins start going up, it started going down. People began to sell, and then it now went to as low as $41. That is when the people that are now buying said, "No, this coin if you go down." Then they now started buying. And then instead of from the bottom that it went to, now it now started correcting. Right? But because of it has already touched $41, it now left a trace, just like a footprint. Take the wick as a footprint. Okay. Remember, I said the coin opened at $46,000 Okay, I'm just used to talking about dollars here, right? So the coin opened at $46. Okay, but then when it opened at $46, people were now selling off. That was remember I told you there's a volatility, that's a fluctuation. The price was now very volatile, and it now dropped. People were now selling off, and then the price now it now dropped to Okay, thank you, sir. I can see you. All right. So the price was very volatile, and then the price dipped to $41. But still within that particular time frame, in as much as it went to as low as $41, the price people began to buy, and then the price began to go up. It began to go up, and then it exceeded the open rates. And then it was still going up. People were still buying. And then they bought, and then it went to as high as as $54. Okay. Remember, the coin opened at what, at $46, but then people, as the thing opened, it began to go down. So probably the buyers are still weak. They never wake up from sleep. They sleep. Okay, so as the coin opened, it began to go down, go down, go down, go down. As now went down to as low as $41. The buyers were like, no, this coin cannot just go down like this. We no agree. And then they started pumping money. And then from that $41, it began to grow. It began to go up. Now, why it is showing a weakness? Because it is not leaving a footprint to tell you that I was, in as much as this is how my candlestick look like. I once went back to what? To $41. Okay, it's just like what, a footprint. Try to tell, okay, I saw this particular place before I went back to my normal price. Right, so if you can look at it, then as it went to what, $41, it began to go up. It now started exceeding the open price. Okay, it now go up. People are now still buying. Then the price went to as high as what, as $54. All right, but from that $54, they were not. Then the buyers were not able to sustain the price at that particular level. Then the price begin to correct small. Remember, buyers were buying and then it went to as high as $54, but then they failed to hold the price at that particular level at a given time frame. So the price began to drop. Then before the price is going to drop very well, it now what? Then that is when the time now expired. Let's assume we are talking about what? Let's say we're in a 15 minute time frame, right? So let's assume, okay, the coin was pumping. Then on the 14th minute, let's say on the 14 minutes, the coin began to drop small. Then the moment that particular time frame was about to get exhausted, that was when the candle closed. That's why we have it at what? At $49. Okay, so $49 is the time at which that particular candle got closed. Or that is why it is written there at what? At $49. So if you can look at it, the coin started quite all right at what? At $46, but then the buyers were still asleep. So the sellers pushed the price down to what? To $41. But even as it went to $41, that is when it now occurred to the buyers that these people are winning also. The buyers now woke up from their sleep and then they started buying. Now I'm just saying buyers and sellers. I don't mean that people are. It's just humans across different people across the world are what constitute the buyers. So if you see me talking about buyers, it means everybody that's interacted with the crypto market at that particular time. Okay, so the moment people began to buy, the price now went to as high as what? At $54. But then the pressure was not really strong enough to sustain it at that particular period. Okay, so the price began to drop small. And then when the time got exhausted, when that particular time frame got exhausted, the coin was at what? At $49. Okay, so that is when it handed over the baton to another candlestick to continue the race. Are we together? So that is when it finished its own race, and it handed over the baton to another candlestick. Okay, so that's exactly how a green candlestick is formed. All right, so let's look at the red candlestick. Now remember, I told you the red candlestick represented what? A buy pressure, meaning buyers are in control. And anytime sellers are in control. And anytime sellers are in control, it means the price is going to be falling drastically, because selling pressure leads to what? A dip in the price of a particular cryptocurrency. So look at my price there. We have what? $65, meaning the coin when the coin was about to receive the baton, when this particular candlestick was about to receive the baton, the price of that particular cryptocurrency was what? At $65, right? Just like what relay race, we always do in primary school, whereby you're waiting for your partner to give you the baton before you continue the race. Okay, so that particular point at which this particular red candle is collecting the baton is at what? Is at $65. Okay, so when it collects at $65, the buyers were now angry. The buyers were now pumping the money. And then the price rose to as high as what? At $70. Okay, remember the coin opened at what? At $65. And then the buyers were now aggressive. They were now putting in money. They were just buying. Then the thing was now going up. It now went to as high as what? As $70. That is the highest point at which that particular cryptocurrency was able to reach within that specific time frame. Okay, so by the time it got to that $70, that's when the seller said, no, we no go agree. How can this person just come and overshine us like that? We no go agree. So the seller started adding pressure. But because of, you cannot just erase the $70 from the equation, because the price at that particular time frame, the price was able to get there in the first instance. Okay, the price was able to touch $70. So you just need to keep a record. You just need to be recorded in the history of that candlestick that, okay, at this particular point in time, I was able to hit $70. Okay, but then it will not really have a body there. It's just going to have a footprint. It's just going to have a shadow, and that shadow is what we call the wick. But sometimes the wick is at the up part. Okay, so the coin got to what, to $70, but then the buying pressure, the selling pressure began to what, to get more, and then the coin began to drop. Before you know it, it passed the, it now go below the price at which what it opened, and then it kept on going down. The sellers were just selling. The price of the coin was crashing, it was going down. Then it went to as low as $56. I hope you're paying attention to this particular thing. Remember, the coin opened at what, $65, but then the buyers were still in control. They were saying, let me get this gain. They were now pumping money, and then the coin rose to as high, that's within that particular time frame, the coin rose to as high as $70. Okay, as the coin went to as high as $70, then the sellers now woke up from the sleep and said, we don't go agree. Why would buyers just come and chance us like this? Then they now started fighting, they now started selling. They now started selling. And you know, whenever they're selling, like I said, whenever I'm repeating this so that it gets into your head. Okay, so by the time the sellers began to sell off the asset, then the coin began to drop. But since for the fact that the coin has gotten to a high position, a higher position within that specific time frame, it is going to be recorded as the high. Okay, so the price went down, it started falling down, and then it fell below the price at which it opened. Okay, it fell below that particular price. Then it kept on going down. Then the pressure was so much that the coin got to as low as $56. Okay, but then as it got to that $56, the sellers began to relax, and then the buyers started to fight back. The buyers began to say, "Kind of, we know if you just agree for this. This is not cheating." Then they began to buy. But then they did not really have enough power to push the price. And then maybe before they fought, it's possible that if this time frame, maybe if this time frame was to stay forever, they might still fight and then overshadow the sellers. But because of that limited time frame, before they were able to fight, the time, that particular time frame got elapsed at $60. That is where the coin closed, and then that particular candlestick got closed. Okay, so that's exactly what it means. The price opened at $65. The buyers were still having enough influence, and then they pushed the price to as high as $70. But then they did not really have enough momentum to sustain the price at that particular level. Hence, the sellers came on board, and then the sellers started fighting. And then they started selling off. And then before you know it, the price has started going below the price at which the candlestick opened. Then it now went to as low as at $56. Then from that $56, they'll be like, "Kai." The buyers say, "Kai, this people don't cheat us so much. Let's see if we can fight back." Then they started fighting maybe their tactics. But then before they were able to achieve more ground, that particular time frame has exhausted. Okay, remember I'm saying particular time frame because this thing can happen on the 1 day time frame. So you can say maybe when the coin got to this $56, before the coin were able to, probably it was maybe around that kind of 11 p.m. So the buyers started fighting. But before they'll be able to achieve enough ground, that particular time frame has elapsed. Probably if it's 15 minutes, the 15 minutes has exhausted. If it's 1 hour, the 1 hour has exhausted. If it's the 1 day, the 1 day has exhausted. Hence, a new candlestick is about to be formed. So at that particular price at which the coin closed, is what I mean by what? By the close region. Okay? If you get what I'm saying, please just drop 222 in the comments to let me know that you are following me. All right? So that's exactly what I mean by what? By candlesticks. Okay? So I want to believe that even if you're not understanding this, watch it the second time. I had a very difficult time understanding candlesticks, because the thing is a bit trickish. But in the moment I kept on familiarizing myself, in fact, by the end of this channel, I'm going to start releasing for you guys an ebook. If you have your time, just go through the ebook. It's going to help you understand candlestick. I think it's just just 54 pages or so, just 34 pages or so, or even less. So by the time you read it, it has what? Okay. Thank you, sir. I can see you. Thank you. Okay, so the candlestick has that particular book has like 20 pages like that. So by the time you begin to go through that book, you're going to better understand what candlesticks. It's very, very difficult and complex to understand, all right? But in the moment you keep on practicing, you're going to get yourself familiarized with that particular thing. Okay, so just take time and then listen to this video again if you have difficulty. So let's look at the next thing we have, all right? Now, see, there's always a correlation between what candlesticks on the chart, right? So this is just how a candlestick appears on the chart. Now, I want you to focus. Now, we're going to start from the from the right. Okay, if you can look at it from the right, we have the red candle there. And what did I tell you now? A red candle now, the up part is always the open. Okay, I wish I can be indicating it here, but then I can't really indicate it. So I'll just assume that you're with me. Okay, so you can look at that the red candle by the right now. You look at it, the open was up. Okay, the candle was a bit bigger, the open was up, but then the price went down, then the close was down. Remember, when the coin is closing, that's when it's about to hand over the baton. Okay, I want you to pay attention to this very, very well. Whenever a coin is closing, it's about to hand over the baton to a next candlestick to open. Okay, so the moment it was about to close, because of the red candle, the open was up and the close was down. As it was about to close, it now gave the button to what? To another person, to another candlestick. That's this green one we're seeing now. Okay, so as you look at, if you look at this green one now, you find that there's what? There's a small, it has a small tail. Okay, so the moment it hand over the button to the next coin, then the sellers see, because we're in a red, it was a red candle in the first instance. The previous one was a red candle, so the thing still has a bit of influence. So they're able to push the coin down below. Sorry, I wish I had an ink. I would have just indicated, maybe we would just form a price for it here. But since we don't really have an ink, I want to just assume any figure of your own. Okay, so the price just went down small. Then the buyer said, we no go agree. This is not cheating. Then they started fighting back. Okay, so as they now started fighting back, so the thing now went above the open. So that's why we have that small tail we have there. Okay, so as they began to pump in money, the coin now rose very high. As it now rose, you can see it rose up, but they could not sustain the power, so it began to come down small. Hence that up small green wick you're seeing there. Okay, so from there you can look at it carefully. See, all of these candlesticks are related. The thing is, it's not just haphazardly placed. It is actually what arranged properly. There's always what a linkage. It's more like a button. You cannot say a coin closed at $40,000 and then the open of the next coin is 43,000. It's not going to work. The close of a particular candle is the open of the next candle. Okay, the close of a previous candle is the open of the next candle. So we look at it from this red one now. It closed at a lower level, and then the next one it gave to the green one. The green one went very up. People reject the price more, and then it closed at that particular level. Then gave to that small candlestick. Okay, you can look at the candlestick. It's still the same thing, regardless of the size or the shape of the candlestick. So that particular one, it went up. They refused. It first went down. Okay, it first went down. As it went down, the buyer said no, they no go agree. They now push the price far above it, and then the sellers they were not contemplating. So before the sellers will now have total control, the candlestick closed. That is why it's very, very slim like that. Okay, if you can look at it, so you can see now since the green candlestick, it means the close is up. All right, the close is up. So look at that the third green candle we have. All right, so you can look at the third green candle opened at the previous close of that small green candle that's like plus. Then it now went up. It first went down small, and then the buyer said no, we don't go agree, and then they pushed the price far above the open. Then it went to as high as a particular level. It came down, it closed there, and then it gave the red candle. Okay, now look at the red candle now. When they gave the red candle, let me explain to you how this red candle was from. The second red candle on the chart. When they gave to the red candle now went up. It now went up. Well, the buyers, the seller said we no go agree. They now push the price low. So in this particular case now, the price closed below its open price. That's why it is red. Look at it very well. You're going to see the correlation. Just take it as a button. The green one closes up, the red one opened, and then it went up, but the pressure could not sustain it at that particular price. Hence, it dropped, and then as it was dropping, it now dropped below the open price. Remember, we said for a red candle, the open is up and the close is what? The close is down. Okay, so it went down, and then there was a small rejection. That's why it has a very tiny tail below. Okay, so from that small rejection, it now went, before it could gain back momentum, it has already closed. Okay, as it now closed, look at it, as it was closing, it handed over the button to a green candle. Okay, as it handed over the button to a green candle, the price dipped small. Okay, the price now went down small. The buyer said we no go agree. They now push the price, or they push the price upward. Because they pushed the price upward, the price went to as high as what? At 21,700. Okay, but as it went to as high as 21,700, there wasn't enough pressure to sustain the price at that particular level. Hence, the price will drop. But before the price is going to drop drastically, that particular time frame has exhausted. Okay, I'm just trying to show you the correlation. I'm just trying to explain this in very, very well. Okay, so just look at it, and then it's the same thing happened with all of these red candles. So look at the next candle now. As the thing opened, it went up small. There was a straight rejection, and then it came down even lower than what it opened. Then it handed over the button to the next coin, and then the same thing happened. It went up small, it came down, and then it retraced again, and then that's how it forms. That is the correlation between what candlesticks. One must actually collect the button from another one. You cannot say one candle. Don't worry, I'm going to give you guys an assignment. I'm going to see who is going to help me answer that particular question. I'm going to form different candlestick patterns and tell you to explain which one is correct and which one is not wrong. I'm just going to arrange it differently. Maybe I'll put one, the close of one is going to be high, and I'm just going to give you guys one very, very simple assignment. And I want to see test you guys what comprehension. Okay? So now that is just all about what the correlation. Just trying to use one to explain to you what a candlestick is. Okay? So let's look at the next one now. Features of a candlestick. This is going to be the last one we're going to be talking about today. The features of a candlestick. These features help you to describe the strength and weakness of a particular candlestick. Okay, for example, now if you let's look at this particular one. You might be asking, if you're looking at this one now, you'll be like, this candlestick, they are not really the same. So they have all of them have different features. Okay, if you can look at some of them are big, some of them have longer wicks, some of them have fatter body, some of them have smaller body. All right, so each of these features now what describes what the strength or weakness of that particular candlestick, and that's what we're going to be discussing in the next video. Okay, so look at it here. The number one feature is what is the size of the body. Okay, size of the body is the first feature you need to look out for. The size of the wick, that's the length of the wick, either up or downward. The shape of the candlestick, each of these candlesticks have different shape. Let's look at this particular one. Look at it, you can see they are not of the same shape. Some are big, some are small, some are extremely long. These shapes what helps in for you to know the strength of a particular candlestick. Okay, then we now have the combination. Okay, some of candlesticks now, they before you're able to understand their strength or weakness, they must come in either in twos, or either in pairs, or in threes. Okay, that's what I mean by in combination. You don't worry, even if you don't understand this at first, I'm not really expecting you to do this. Is not rocket science already, but then by the time you begin to familiarize yourself with this platform, then you're going to understand it very, very well. Okay, so let's look at the first one, and then we'll be able to look at it, the size of the body. Okay, now I want to get just use common sense. Now let's start from the A first, from this green candle first. Tell me which of these candlestick is strong. Just tell me in the comment section which of these candlesticks in the green, just this green, which of these candlestick is stronger. Okay, just comment in the comment section, let me know. Just from common sense. Now remember I told you that what the green represent the buying pressure. Okay, so look at the size now. Which one do you think that the buying pressure is small? Just drop your answer in the comment section and then let me know that you're following me. They say the size helps you determine the strength or the weakness of a particular candlestick. Okay, so by the time you look at A, B, C, D, which of them do you think is more stronger from the size of the candlestick of the body? From the size of the body, which one do you think is much more stronger? All right, so I just want you to give me an answer in the comment section, and then we'll proceed from there. Now, so you're giving me an answer for the green one. I want you to also start focusing on the red one too. Okay, start looking at the red one. Inside E, F, G, H, which of them has is more stronger? Okay. Which of them is more strong? All of them have they all have the same features. You can see all of them have their weak, all of them have their body, all of them have their open, all of them have their close. Okay, but then there's one that shows you much strength, because if you look at the previous example we gave, let's go back. If you look at it here, some of these candles actually have bigger bodies, but they have smaller body. So each of them give you something to take home. They don't just happen like that. The body is not just for granted. You can use the body to know the strength or weakness of a particular candlestick or the particular flow. Right. So I want to just drop in the comment section which one do you think is the strongest in this green, for the green ones now, this A, B, C, D. Isn't nobody's getting me? So we have 3 people here, so we should be able to answer. Okay, instead of waiting for the answer, I think I should just go ahead and just explain. Now look at it now. It's just like strength. Imagine 3 people coming on board now. They tell you, okay, 3 heavy men come now. Sure is the biggest man that's the strongest. Of course, the man with the biggest body is the strongest. So for this instance now, since the A is a bullish candle, that means the A, since it has a bigger body, it means it is the strongest. Okay. It means so if you're looking at your chart and you see, okay, one candle is bigger than another candle, know that, okay, the candle that was bigger has much more power over the small candle. Okay, so you need to look at what the size of the candles is. So A is stronger than B, and B is stronger than C, and C is stronger than D. Okay, that's what I mean by how to use the size of the candlestick to determine the strength or weakness of that particular candlestick. All right, the size of the candlestick. Now let's look at the selling pressure. All right, so if you look at the selling pressure now, I'm about to ask you now, which one do you think is the strongest? Of course, it's still the same thing for the body now. Remember, we're talking about the body. Okay, we're talking about the body now. For the body of this red candle now, H is the strongest. Why? Because of H has there's more pressure. Remember, I told you that the candlestick shows you the pressure, shows you the pressure, the buyers or sellers pressure. So if the body is long and then it is red, it means there's enough pressure for on the seller side. Okay, so that's why the is bigger. So the bigger it is, the stronger it is. The bigger the body, the stronger the candle. Okay, so you can look at it here. This H is bigger than G, and G is stronger than F, and F is stronger than and E. Okay, so that's exactly how it is, right? So the D is less stronger than C, C is less stronger than B, and A is the strongest of all. So if you say, okay, if someone was asking them, look at the chart and tell me which one was the strongest among all of these candles, the strongest bullish candle is A, and then the weakest bullish candle is H. Okay, the weakest bullish candle is what is H. But if you're coming from the other end now, the strongest bearish candle is what is H, and then the weakest bearish candle is what is A. This might confuse you, but then I want you to listen to it a second time, and then you'll be able to understand what I'm saying. Watch the replay, then get it very, very well. The strongest bullish candle here is what is A, and then the weakest bullish candle is what is H. The strongest bearish candle is what is H. Then the weakest bearish candle is what is A. All right, so that's exactly how the body would affect. Because see, in some instances now, when we begin to conduct real life technical analysis, you begin to say, okay, sometimes when I want to look at, maybe when we are done looking at something, then we're kind of confused about who is in control, who is currently having an influence over the market. The next we need to look at what is the size of the candle. Okay, so if you discover in a particular trend, green candles are small, and then red candles are big, it should signify that, okay, what in this particular trend, the sellers are in control. Okay, that's exactly how you take advantage of this chart. All right, in this particular, whenever you check a trend, or you take your chart, and then maybe at that particular point in time, the green candles are bigger. It's an enough indication for you to know that, okay, at this particular point, the sellers, the buyers, are in total control. Okay, please, if you can hear me, I want you to drop. It's as if I'm not really communicating this well, but then because I'm yet to see anybody's reply. Okay, but then if you can hear me and then you're getting what I'm saying, please kindly notify me in the comments section. Okay, so let's look at the next feature now. We have the size. Okay, the size of the wick. Remember, the other one was what? Size of the body. Right, then this one is what? Is the size of the wick. Now I want you to pay attention to this particular part because it might be a bit trickish. Okay, it might be a bit trickish for you to understand, but then if you give me your proper attention, you're going to understand it very, very well. Okay, now I'm going to be giving an example now. In order to explain this particular point well, I'm going to be using what? An army. Okay, I'm going to be using what? An army. Now let us start from A now. That's the first diagram you see. You see what? A. I labeled them. Okay, so let us start from A now. Let's assume we're in a barrack. Okay, we're in a barrack, and then the commander get, okay, guys, people should go and fight for me. Okay, then he release what? The bull candle. The bull. Let's call, if I say bull soldiers now. Let's say you just understand what this buyer. So he released the bull soldiers to go and fight. Okay, so the bull soldiers went into the battlefield. They opened at a particular price. Remember now, all this now what are candlesticks. Just follow my illustration. So the bull buyers opened at a particular candlesticks, and then they were fighting, and then they were conquering, and then they went very high. Okay, they went very high, but as they went very high, the sell soldiers, the other enemies, say no, we are not going to agree. So the other enemies now sent in their bearish soldier. Okay, they sent in their bearish soldier, and then their bearish soldier began to fight and started killing the bull soldiers. So instead of killing them, they began to reduce their population drastically. Hence, a long week. But before they could finish them, that particular time frame was elapsed. I'm trying to explain each of these candlesticks using what? An illustration. Okay, the bull candles were released, the bull soldiers were released. They went to the battlefield very aggressive. They were fighting, they were winning, they were conquering, they were winning, and then it got to a particular point, and then the opposition party say, we are not okay, we're not satisfied. Okay, thank you, sir. I can see you, Mr. Boniface. Okay. So the opposition party, we're not going to agree, and then they started retaliating, they started fighting, and then you can see the wick is almost the same height with the body. So if you know, it means what? There was a resistance, there was a rejection. The other party rejected the price movement. Okay, they tried to show to that, see, not be by mouth to, if people should come and make like the bull soldiers, but they came and make money, they were conquering, but it got to a point whereby the bearish soldiers say, no, we are not going to agree. Then they started fighting back, and then they started winning. But before they could clear all of the bull candles, that particular time frame got elapsed. So the candle gave the baton to the next one. Now, I'm not saying the next one is this particular candlestick here. No, the B is not the next one. I'm just giving an illustration now. B is an entirely different candle on its own. I'm just explaining it using the size of the wick. Okay. Now, let's explain B too. Let's assume that they released the soldiers into the market. Okay. The soldiers went into the market, and then they went up. They went into the market. The reason they went to the market, they fought. They were still making money. They fought. By the time the opposition party came to their senses, they were like, no, we are not going to agree. Then they started retaliating. But the amount of people they killed, the amount of casualties that candle B has is not the same thing as the casualty that candle A has. Look at candle A now, it has a long week, meaning they killed a lot of soldiers in that particular instance. Now I'm just using this soldier illustration so that you'll be able to understand it very, very well. Okay, so now for candle A, there was a lot of casualties, but for candle B, there was no casualties. In as much as when they started the war, they were aggressively fighting, and they got to a particular point, then the opposition party said, no, we are not going to agree. So they started fighting, but before they could kill a lot of the a lot of the bullish candle, they were able to hand over the baton to the next candle. Okay, so that's why they were able to have little casualties. Okay, so you can look at it now. The casualties is what is dropping, Okay, so now as the casualty drop, look at the candle C now. Okay, candle still open, and then the buyer say no, they were talking, and then they were going up. So they got to a particular point, and then the opposition party, no, we are not going to agree. So they started fighting, and then they were not really strong like that. So they had only very few casualties. All right. So if you can look at now, candle C has lesser casualties than candle B, and candle B has less casualty than what candle A. Now look at candle D. Candle D is very, very simple. The buyers, they went into the market, they conquered plainly. They did not even have any, as the highest they got was they were able to sustain their energy even at the highest point. Okay. I want you to understand the ideology behind this particular thing. It might take you a while to understand it, but the moment you understand it, understanding candlestick will never be a problem for you. Candle A has a lot of casualties. People they had power, they rose to power, but then maybe they went and relaxed, and then they started killing them, and then they killed them, and then there was a lot of casualties. Hence, you see that week, a long week. Candle B, they started fighting, they got to a particular point, and then they started killing them, but then they were still able to hold their position, so they did not really have much casualties. Okay, then candle C, they opened, they were able to conquer, but then they see the opposition party was still resistant, but then they were able to just have just little casualties. But look at candle D, very strong fit. They had their plans well intact. So the moment they launched an attack, nobody was able to defeat them. They didn't have any casualties, meaning they are the powerful. Okay, so in this instance now, candle D, in this particular, anytime you see a candle that has a very small wick or doesn't has at all, it means it's a very strong candle. It's a very strong pressure, is strong bias pressure. Because of the price at which it was. If in this instance now, the high is the same thing as a in this particular D now, the high is the same thing as a as the close. The highest point at which the candle was able to reach is the same price at which it closed. Meaning the pressure was strong enough to sustain. They were able to hold their ground. They had stamina to stand. They had more power. But look at A. A made more. It went up, and then they defeated it. They killed almost half of his soldiers. To show that A is the weakest in this instance. All of them are bullish. All of them are bullish candle, but A is the weakest. Why? Because of they've defeated it already. Okay. Then look at B. B is a bit weak, but then it's stronger than A because it has less casualties. Okay. Now look at C. C was able to go into the war front too. The bulls were able to be in control. They had casualty, but not enough casualties. That's why their weak is small. And look at D. D does not have any weak, meaning that there was no casualties. It entered into the battlefield, and then it conquered. The pressure was adequate enough to sustain the coin at high as it is. So there was nothing like their pressure. This kind of candlestick is really it rarely forms, right? But once it forms, how the buyer comment, okay, this particular trend is strong. All right. So let's look at the red candles now. Look at E, right? E is the same thing. Now remember now, I'm talking about soldiers now. So we have the bull soldiers, and then we have the bearish soldiers. Remember, everybody's trying to win. So in this particular green one now, yes, in this particular the first green one, this A to D. In A to D, the bulls actually win. The bull soldiers actually won. But we're just looking for which one is the strongest. So we agreed that D is the strongest because their pressure was able to they were able to conquer without any they were able to conquer the enemies without any casualties. Now look at the other station now, like candle E now, right? Remember now, when the candle started, the bulls were pushing the candle. And then it got to a particular point, and then the bears soldiers say, no, we're not going to. There's the sellers. They say, no, we're not going to agree. They started fighting, and then they caused massive casualties. Now they did not just cause casualties; they were able to push the price even below the open price. Okay, so this casualties there now it's more like they did not just saw and conquer. They did not just come. They came to the battle. They killed the bulls, and then aside from killing the bulls, they dominated the environment. Okay, are you getting the psychology behind this thing now? The candlestick opened, the bulls were in control. They were pushing the price. I'm trying to explain the red candles now. That is, we're trying to explain E now. Okay, the candlestick opened at a particular price. The bulls were pushing the price. They were pushing the price. They were pushing the price. Then they got to a point whereby the sellers say, no, we are fed up. The sellers began to fight. I'm just trying to give you you guys this illustration so that you guys can just have a mental picture of how this thing operates. Okay, so the sellers began to fight, and then they started to cause casualties. They began to kill all the bulls, and then they got to the point at which the coin opened, the price opened. But did they just stop there? No, they didn't stop there. They even intruded into the base of the bulls and killed, and they dominated. Okay, so you can see, aside from just killing people, aside from just killing their enemies, killing the base, they dominated the world with a serious gap. Hence the what the week up, and then what this is what the week signifies what the number of people they were able to conquer. Aside from just conquer, they were able to dominate the city again. Now look at F. F did the same thing. The coins opened, the bulls were in control. The bulls were able to go up small, then the sellers began to fight. So the sellers were able to have lesser casualties. No, the sellers were able to they were able to kill, but they didn't really kill more people as the bulls killed. Now imagine a situation whereby you go to a war, then they were killing, they were winning you guys at first, so then all of a sudden you guys just turn and then you guys started fighting. It means you guys had more energy, had more power. Okay. So that's the F now. Now I'm trying to explain the F now. So as the coin opened, the bulls were pushing the coin, but they didn't really go far before the sellers began to say, no, we are angry now. They started fighting. So the casualties was not as much as that of candle F, of candle E. So they still kill the people, and then they still enter and conquer their land. Hence the body of that candle. Okay. So you can look at it now. If you look at it now, candle E has more strength than candle F. Because of what? Aside from just candle E, aside from candle E just killing people, it did not just it killed a lot of people and still had a lot of energy to even conquer. Now look at candle F. Candle F just killed a few people and just had the same thing to conquer. So now we're looking at it both on what in terms of casualty and in terms of places they conquered. In as much as they conquered almost the same territory, the people that killed the most people are those that are the strongest. Okay, now look at candle G now. Candle G is the same thing. The bulls, the coin opened, the bulls were riding the coin up, but then the power was not really strong. They just had little people to kill, and then they kill, and then they dominated. So then they're able to just kill just a few people for them to dominate the game. All right. Now look at candle H. Candle H is the weakest, because just as if they just went to a battle and then they just went to the battle without any casualties, just won and started conquering. They started taking over the state. They didn't really kill anybody. There was no any much struggle. Okay, so that's why you say the strongest candle in this particular instance now is candle E. Okay, candle E here is the strongest. All right, candle E is the strongest. Okay. I want to believe you're getting what I'm trying to say. If you're getting me, please kindly drop 111. Let me know you're getting me. So in this particular instance, for the red one, candle E is the strongest because of what? They were able to conquer they were able to kill or conquer a lot of soldiers before they went and dominated the city. Candle F were able to do same too, but then they were not able to dominate. Okay. Now look at candle G. They were able to kill just a few, and then they still went and dominate. Then candle H, they did not kill anybody. They just went and they started dominating. So you might say they don't really have enough power as well. Those people that actually killed, they fought as someone just fighting, they fought and still had enough energy to go and dominate. So that's exactly how you get their strength. Okay, so if you can look at this, is a bit trickish yet, but then I want to just take your time and understand it. It's not hard, honestly. It's not hard. At first, it might be hard. I'm expecting it to be hard at first, but in the moment you keep on practicing and then you keep on familiarizing yourself with it, you're going to get clarity. Okay, so let's look at the next one now. I'm just going to be fast on this particular one so that we don't really waste much time here. Okay, so if you look at it, it's still the same thing, right? But this time around, they can't do what the weeks are under, because sometimes the week might be up, the week might be under, right? So look at it. So candle one now, all right, look at it. The coin opened at a particular point, and then it got to a particular point, and then it closed. It did not fight anybody, right? It did not fight anybody. Now look at candle two. Candle number two. At the coin opened, the sellers began to push. The sellers now pushed the price a bit low. Now look at number two. There was a small wick. The sellers pushed the price a bit low, but the bulls said no, they now exacted power. The bulls now exacted power, and then they were able to conquer the sellers, and then they were still able to conquer. All right, they were able to kill some bears. They were able to conquer. So that's why they have a small wick. All right. So look at number three now. Number three happened that the coin opened, but as the coin opened, the bears were in control. They pushed the price below, but then the bulls said no, we're not going to agree. You cannot just come to our territory and kill us. They started fighting, and then they began to cover up. They began to cover up, and then they began to rise above the price at which the coin opened. That's how we have candle number three. Then look at candle number four. The coin opened at a particular region. Then the bears were in massive control. They were selling, and then the coin was just going down. Imagine just like. Yeah, imagine a situation whereby you went to play Barcelona and Chelsea went to play ball, and then Chelsea was beating Barcelona mercilessly, and it was almost time for Barcelona to quit. Then Barcelona just woke up on their mind and then started retaliating, started flogging. That's exactly what's happening in this candle number four. The the candle opened, the sellers were in control, they were pushing the price down, down, down. Then the bulls just wake up from sleep and then they started fighting, and then they were able to dominate. Okay, so in this particular instance now, the strongest candle here is what is number 4. All right. Now I want you to this thing might look a bit confusing if you not really give it your time to understand it. Okay. So in this particular instance now, the strongest candle is what is number 4. Okay, why was it number 4? Because of what they were able to, they did not just come and dominate, they were able to fight a war before they dominated. So it means what they had a lot of energy to fight to even dominate. Okay, so the same thing happened with candle number 5. Okay, for candle number 5 now, you can look at it, the coin just opened at a particular level and then it just went down. Okay, so it means it was strong. As it just went down, nobody could challenge them. As they opened the market, they were just pushing the price. They were able to push the price to the extent that it went very low, and then the selling pressure could hold the price even at that particular low point. Okay. Then we went to what? We went to candle number 6. Okay. For candle number 6, the coin opened. All right. The coin opened and then it went down. But then as it went down, the buying pressure was not really strong enough to sustain it at that particular down point. So the bears were able to just kill. They experienced just a few casualties. Okay, the experience also what a few casualties. So also the same thing with candle number 7. The coin opened, the sellers were in massive control. The sellers were pushing the price down, but as they pushed the price down, they did not really have enough momentum to sustain the price at that particular level. Hence, the price was able to go back. The bulls were able to just kill a few of them, and then but they still won the match. They still won the battle. That is why they have a relatively long wick below them. All right. So we now have the next one to number 8. Right, for the number 8 now, we have a situation whereby the coin opened and then the sellers were pushing. The sellers pushed the coin very, very downward, but then they did not really have enough stamina to sustain the price at that particular level. Hence, the bulls began to win them and then to overcome them, and then the price went up, and that was how they were able to close. So they had more casualties in this particular instance now because the bulls started killing them before they were able to still hold their stamina, and then they handed over the baton. Okay, so that's exactly how the size of the wick works. So if you look at it now, just like for the decision of the one labeled ABCD, if the wick is up, any candlestick that has any green candle that has the wick up is what is the weakest candlestick because it has more casualties. Okay, and any red candle that has the wick up is the strongest because aside from just fighting a battle, you fight the battle and still conquer the land. Okay, so that's exactly how you can understand these candlesticks. This session is getting unnecessarily long, but I wanted to just explain this in a layman term so that you guys can really understand it. Okay, so let's look at the next one now. A combination of candlesticks. All right, a combination of candlesticks. Now I told you so these candlesticks now, but they'll give a meaning, but then their meaning cannot just stand on its own. You need to have them in combination. Okay, so if you can look at it now, they can come on their own. That's the first. Look at the first line. That way we have the first green candle, we have the second green candle, we have the third. That's the first line. If you look at it, is the first row. Is it column 9? Okay, the first row now you can see these candles they are standing on their own. So once you look at them, don't worry. By the time we get probably from tomorrow's session, I'm going to explain to you each of what these candles mean. So by the time you look at them, they will tell you, okay, this is what the coin is about to do. By the time you look at remember I thought that technical analysis is your ability to look at past experiences to look at what has happened before to evaluate what will happen in the future. So it has been proven that anytime this candle formation begin to form, this is the most likely reaction that's going to happen. Okay, so there's explanation for all of these candlesticks. Okay, so if you can look at this, the second line, we have this conversion happening in twos. Okay, so whenever you see a candlestick happening in this formation now, that's the second box now for the candlestick happening in pairs. Okay, once this pair happen, there's always something that happens afterwards. Okay, that's what a strong indication. So even this, look at it, just look at it. Whenever this particular candles happen like that, there's actually something that happens. Okay, whenever they happen, there's a particular reaction that follows suit in the market. Okay, now let's look at what the third and the last column now. The third and the last row now, you see they're in pairs of 3, a combination of 3. So whenever these 3, you see a formation like this, it means something's about to happen. Okay, very, very important. Whenever I see a combination like this, something is about to happen. All right, so that's just all about it. Now look at all the 3. Just look at the combination. All right, I'm just trying to call your attention to the combination. About all of this combination, I'm just trying to call attention to the fact that some candlesticks work together as a combination. Some work individually, some work as a combination of 2, some work as a combination of 3. All right, so whenever I see some certain combinations like that, the market. Okay, so that's just all about introduction to candlestick analysis. I want to believe that you got value in as much as it's kind of complicated, but I believe that the more you watch it, and then I'm going to send you an ebook that's going to help you understand. Okay, so that ebook is meant to facilitate your understanding. Just find time and then go through the ebook. At least that one is written probably in simple language that I even explained here, but it's going to help you to understand these candlesticks better. Now, I think that is all. So thank you. Now, in order for you to properly understand candlestick, now there's this particular website I have that I do go to when I started learning about candlestick. They explain it in very, very simple terms. The name of the website is www.babypips.com. Okay, just as the name implies, baby pips, they will explain for you candlesticks in a very, very simple manner. So if you want to understand anything about candlesticks and probably crypto or anything chatting bar, go to this baby pips and then see how you can start familiarizing yourself with some of this concept there. It's actually going to help you a lot. All right. So thank you all for staying to this moment. And then we'll call it a day at this particular point. Thank you. See you guys next time. Peace out.